Hey, Kevin here, top 100 financial advisor and best-selling author, and we are here to talk about the stock market. There were a lot of things that happened today, and if you are only focused on the market, then today was a pretty good day. Pretty good day. And a lot of the stuff that happened today in the market really confirm a lot of the stuff that we have been saying for a little while. Remember, and really, if we're going to be honest, we've been saying this stuff for the last 2 years. And the premise has been when you see volatile markets and violent swings for whatever reason, sit still. Focus on quality. I've been saying it for 2 years. And I've said this stat, if you have been around for the last 2 years, and you definitely know this, that usually after the worst days of the year for the stock market, the best days of the year are right around the corner. JP Morgan even put out a study on this. I just spoke on Wednesday to a group where I did a seminar on this exact same topic, and I showed screenshots from CNBC that had, from 2020, worst day in the market since 1933, worst day in the market since the 1980s, and then just a few weeks later, just a few days later in some cases, boom, we have one of the best days of the year. That happened today. It started yesterday when we were down 859 points, and then the market was positive. Don't know how that happened really. And then today we had one of the best days since late 2020, and this was from CNBC. This is one of the reasons why I've been warning and saying, look, you don't want to chase, you don't want to react and be emotional, because if you were and you said, oh my God, this is happening, this thing is awful, and the market is tanking, and you withdrew from your 401k, you sold your stocks, you missed out on yesterday's gains, and you definitely missed out on today's gains. And what people will do is say, oh, well, let me hop in now on Monday, and then Monday it falls. I don't know what's going to happen on Monday. I have no idea. I'm not going to claim to know, because just like I didn't predict what would have happened today or the day before, I'm not going to predict what happened on Monday either. But I can tell you this, just like we've been saying, sticking to your portfolio is sometimes the best decision, especially when we don't know what's going on, when it's something as volatile as this. Same thing. It can be, an unfortunate catastrophe like, violence and war and geopolitics. It can be something like a deadly virus. The market is still the market, and sitting still is sometimes your best opportunity to win as an investor. This is why I've been saying that. I haven't given y'all no suggestions in terms of this is happening, move to these companies now. No. Right? The same companies that were good 5 weeks ago or were suspected to be good 5 weeks ago are still good now. Someone asked me the other day, what are the best stocks to buy right now? The same 5 stocks video I put out in January, because nothing has really changed for those companies, right? The environment has changed, the world has changed, but just because something is happening doesn't always mean that the company that you own has gotten that much better or worse, and that is the thing that you want to pay attention to. The other thing you want to pay attention to is a trap that I foresee people fall into and may fall into this time around. For example, Etsy did incredibly well today. They announced earnings. They were up 16%. Man, I used to like Etsy too. We've talked about this, and Etsy should have been much better than what they are. However, they were up 16% today. A lot of people love to hop on and chase that trend and say, oh, it's up 16%. I want to go back into Etsy. Except that Etsy is also down 51% in the last 3 months. I don't know, player. I don't know if this is the place that you want to be just because it had one good day. The same goes for Block. Block absolutely shocked me. It was up 26% today, but it's still down 43% for the last 3 months, which again shows you how ridiculous the market has been, especially for a lot of tech names. I've been on record, even though I sold out of Block because it was dropping far too much for me, I don't think it should have been down anyway. It shouldn't have been there. We talked about this on the Flavor podcast as well, where they think that the Cash App business is undervalued and people are shopping more than ever, and they're growing, they're doing all these amazing things. And I agree. They are. They should have been down 43% in 3 months. That's ridiculous. But today, they clawed back a little bit of that money, and they were up 26% in a single day. What I'm not going to do, even though the report was amazing, which I thought it should have been, I don't see anything wrong with the company, but the stock is not responding. The problem is, though, what happens when the world turns their eye, or the market rather turns their eye back to inflation, when we turn back to interest rates and all the stuff we were talking about before Russia Ukraine. That's what accelerated the drop in companies like Etsy and Block and others. We'll see what happens there. But what you don't want to do, just in a negative case, is your goal as an investor is to stay the same, right? You want to have an even keel approach and mindset. So even when the markets are terrible, what did I do? Stand still, remain calm, focus on quality. I've been saying that for years, right? And even when things are great, like Etsy, like Block, and whatever else did incredibly well today, guess what? Same thing. Remain calm, stand still, focus on quality. Are those two companies quality? The companies may be quality, but are the stocks quality? I don't know. You had a great day today. You had a great day, Block. Appreciate you. For those who invested yesterday and got that pop, that's amazing. I don't know if that's going to continue. I would hope it would. I wish it would. Don't know if it will. They're so dangerous, right? And the other thing is, a lot of people who are going to chase and react emotionally to these things aren't going to connect the dots. And here's the dot that you want to connect. Because of what's going on in Russia and Ukraine, we know that the United States, as well as other countries, are announcing sanctions. What do sanctions do? Sanctions essentially cut off parts of Russia's financial business, which allows them to afford to do a lot of the really awful things that they're doing. Well, when you cut someone off from oil and finance and their minerals and all that kind of stuff, you restrict supply, which could actually hurt inflation and drive inflation even higher, which we've seen already before, if inflation drives higher, then we get afraid of the Federal Reserve raising interest rates. When we get afraid of people raising interest rates, tech companies tend to fall, and we end up exactly right where we were at the beginning of this year, and especially in January, where a lot of tech names that didn't have a lot of money and cash on hand, those companies were the worst. Those were the ones that were falling. So you might end up in the exact same situation if you are not paying attention and if you are not focused on what is actually going on and what are the financial implications of it. So staying still is still the answer here. Focus on quality. If you had quality companies before this week and the week before, you might want to stick with those. Those defensive stocks that we've been talking about since a lot of this craziness started to begin in terms of inflation and interest rates, it might still make a whole lot of sense to stick with those and ride things out. What you don't want to do is allow one really ridiculous week to change your entire perception of the market. Because the two main factors before we got to the chaos in Europe and Russia, those factors are still here. Inflation has not gone anywhere. Sanctions could make inflation worse. We'll see. It may not be immediate. I don't think many people are expecting it to be immediate, but that is still a case. Is there a light at the end of the tunnel from an investing perspective? It is possible, right? And we've talked about this. It is still a rumor, but it is possible that the Federal Reserve may not be as aggressive in terms of how they want to raise interest rates in March. March is just a few weeks away. We'll see. What you don't want to do is gamble and say, this week was good, even though we're still actually down this week if I'm not mistaken, but this week was good. I'm now going to chase and pick up all those tech names that I think make sense now. They made sense now, they probably made sense a while back. Like, I've been talking about Apple for a minute. We've been talking about Microsoft for a minute. Those things haven't changed, right? So again, the advice, the suggestion, my viewpoint, however it is you want to use that phrase, is stand still, keep your face the same. It does not make sense to let your emotions, whether it be excitement or grief or what have you, to run your financial decisions. Your emotions do not do math. I've said that before, right? You can have emotions for the tragic things that are going on, which I definitely have. I have good friends of mine who are directly affected, so my hearts and donations and things are going there, right? But as an investor, I've got two different things, and I'm saying I'm going to keep whatever I had the way it was. I don't need to react and change that stuff there while having my primary focus with the people who are affected. You can do that, right? You can do those two things. And again, because this situation has been ridiculous, even before, the situation was still bad. right? Remember, we were down on the year. We were already talking about correction territory and hitting a correction before we even knew that this conflict was going to be a thing and before it escalated to this level. So again, this is one of the primary reasons why I'm not coming out with a brand new list of stocks to talk about, because the suggestions and problems still exist. Until one or more of those things has been alleviated and wiped off the table, then we'll come back and adjust that strategy. I'm not moving nothing until June, because at that point in June, I'll have way more information after we're halfway through the year. Obviously, we're not even done with the second month of the year. It's a lot of information to pour through when we hit June. That's why I'll make those big moving decisions depending on where we are at that point in time. So again, I know it's a lot of noise out there. I know it's a lot of stuff out there. I know there are a lot of real problems that are out there as well. From an investor perspective, zoning in on one issue, you need to remain calm. If you are dollar cost averaging, you need to remain dollar cost averaging. Because again, today y'all saw me invest like I normally do on a Friday, right? Whatever I got yesterday, or not yesterday, last week and the week before, that's up. That's up, right? Because the market was down. I was picking up the stuff that I was going to pick up anyway. That was not going to change. So I'm not trying to guess and game the system with my primary dollars, right? You don't have to do that. You don't have to do that. You can sit back, relax from an investor perspective, and just stay still, okay? If this don't have nothing to do with a lot of the companies that you may own. I own Target. I've talked about Target before, and that's not to push Target, because Target's not doing great right now. But again, I know for a fact, we can look at the finances, right? Target is a quality company. What's going on with interest rates doesn't really impact Target the same way it would a Unity Software, ticker symbol U. It's not going to impact a company the same way it would impact an Etsy. Target is fine. What's going on overseas ain't got nothing to do with Target. Target dropped anyway, right? We talked about that. But Target is still a quality company. I don't need to react at this point in time. If I want to react, I can react in June and see how I feel at that point in time. All right? So again, I've said it before, I'll say it again. Just really drive the point home. Remain calm, stand still, and focus on quality. All right, that's it for me. I'll see y'all in class, because I'll be teaching class a lot of the time. So make sure that you go to the link below, buildingbread.com/free class. And I, again, teach class almost every day on how you can create your six-figure investing plan, no matter what your budget is. All right, talk to you guys later.